Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello, everybody. Welcome back to another episode of Tech Talk. I'm Cody. This is Andy, and together we make up the Tech Talk duo. Andy, how you doing?
I'm doing so much better now that I'm here with you doing Tech Talk. It's a new year.
I kind of threw you off with the Tech Talk duo, didn't I?
It kind of did a little bit, but not quite. I mean, like,
I want to keep you on your toes.
Well, it is. I mean, it is what it is, you know?
I hear you.
You like pumpkin pie? Is that right? I forget. Do you get that?
This
you ever
is
get
an
that pie?
conversation. But yes.
It's not even relevant.
It's not relevant, but yes.
You know what, though? Here's something that's not relevant either. But I was watching some old episodes, really just one, the Jaskell one.
Yeah.
And at the end of it, if you watch it, at the end of it, we asked him when he's coming back. Yeah. And he said, you won't see me until 2023.
Yeah, you'll see me in 2023.
Here we are.
So here we are. Are we in 2023? I forget.
You got to get him back on the show.
So we'll start the countdown again. Today's the 19th of January.
Correct.
My guess is he's skiing right now.
So we might see him in March, April?
Maybe. I mean, depends on the weather in Chicago. Like if it gets warm enough for him to go golfing, yes. So my guess is he's on a ski lift somewhere or in Mexico.
It's very fair.
But the Jaskell countdown, we'll start it up.
Perfect. Well, until then, we got some charts, not so great looking charts, but we got the charts.
We got some charts. They're not great looking, but they're charts nonetheless. First
one we've done before, quite a bit. CME Weekly Cheese.
Yeah. So this, what is this? This uptrend that started. This is what we looked at before, and it tried to close through it a couple times. Let's just do this real fast. It was like Gap City here for a while. Here, gapped back higher. But this is the first time, really, since this trend began, where you had a close lower, and then, who knows? Maybe they rip it higher tomorrow. But today's Thursday. We have one more day. This is a weekly of it. If you get a close here or lower, this will be the first time since July that this trend, since this trend began.
Yep.
Right?
Yep.
This is July of 2021 too. I mean, this has been in force for a while. I mean, it would be a big, I guess, violation of this trend, right? Correct. Again, you've had closes below it before, but they were always, complemented by whoop, right back up.
Now you're looking at prices that we haven't seen since July, August, Sept of 2022.
Correct.
Right. And I think you and I have mentioned that in the past one or two times that we looked at this chart of, hey, if we get back down there, it was a clear price point of support there. And a settle below this and another gap down from there would be obviously not good for the bulls.
Pretty wicked. But yeah, no, I think this trend, it's held up so long to get a close through it and then another subsequent close after the fact confirming it. I think it's going to be pretty jarring here.
Yeah.
Something to note though. So this is March cheese. And today, how many contracts traded there? 436 so far.
Yep.
And it's all been basically at one price, $1.87. Just
Correct.
One giant iceberg bid.
Yeah.
Just kept getting, hit while cash was just, getting crushed, right?
Yeah.
And it's interesting that that bid is approaching right at the same spot. This is the low from the 4th of this month at $1.87.
Right.
So it's going to do our eye time for March here, right? I mean, if we can't chew through this bid, then I think the market could easily snap back to like $1.90, $1.91, which wouldn't be that far away.
No.
That's a 40, 50 cent rally in an equivalent, class 3 basis. That's not very much.
But flip that comment. I guess if they can eat through the bid, there's nowhere on this chart, at least on the daily, that says, hey, there's a next stopping point, right? If we do chew through that bid on the bottom side.
Right. And I mentioned that 187 price. To your point, there is no real material support beyond that. But also, too, $1.87 is a clear price that the market wants to move a lot of volume at.
Correct.
Right. We talk about how it's a big iceberg bid. It's getting chewed through. It's also, willing sellers that are willing to take on that size, too.
Right.
And so let's say we get through that price then becomes, it becomes a very important price as we progress through the rest of the contract, which doesn't start pricing for a few weeks either. We just started February.
Correct.
So let's say we chew through that bid, close lower, then that 187 becomes resistance. Conversely, obviously if we can't get through it and we bounce back, it's pretty clear. And you have this potential W forming. The only caveat here is we just looked at it. So I kind of want to bounce between the two, but This is the first time since this trend started that you've had, assuming we close lower tomorrow, unched or lower, which they could still rip it higher tomorrow. Who knows?
Yeah. Yep.
I mean, we settled at 178. We could be at $2. We could go up, 22 cents tomorrow? The way this thing's been trading?
They've done it before.
I know, right? I mean, the way the spot market's shaping up, it seems like you're going to chew through this bid and continue lower. If we do, 187 becomes resistance because it's an interesting point because we're moving so much volume, right? Price action is confirmed well by high volume. I don't know. We'll see. This one came back at request from our friend who we also need to get on the show, Raj.
Yes, we do.
I think his comment was, we're going to continue to drift lower. And he asked us to take a peek at spot butter. What do you think?
Let's see, what do you got? You got that on a weekly?
Yep.
Oof. I think we talked, well, don't you have the arrow there from last time? We have a gap down there at about 220, 226, 225?
We haven't touched this chart at all, right?
Okay.
In terms of things that we've drawn. So yes, 226, 225. I mean, it's easy to say it's another 7 cents away. So not much, right? But it seems like filling this gap is definitely next up in the cards. It's a question of whether or not you continue to break, right? And if we do, then really, I mean, like it's this $2 mark becomes a magnet, right? Because we really started to take off from that price.
Mm-hmm.
And you could argue too that, I mean, really the breakout occurred at 190.
Correct. Yeah.
So it could get, let's say we fill this gap. I think it gets pretty noisy in here, right? We start to, like the downtrend becomes less pronounced and you start to see, I think you get a lot of trade like this. I think we're actually due for something that kind of looks like that. So close to this gap, let's say, and then you kind of hover in this range right here.
Yeah.
With, the support area being 190 where we broke out from, and, the resistance area being like this 225 where this gap started.
Which, in the case that you have circled from where we are right now, is a good 30 cent break from where futures are.
Correct. Which, look at that bad boy right there. That's down 46 cents. So it seems like a lot, but it's something we could get to pretty quickly.
Yeah.
But, yeah. This came at request. We got another request, Raj.
Here we go.
He's saying we're going to drift lower. We'll see. But I agree. I think we got to fill this gap, and then we get into kind of a consolidation between this range between 191 and 225, where we broke out from. Keep them coming. The requests, etc. We're going to get some guests.
We love
this. This is your personal favorite.
Yeah, March corn.
This is like your pumpkin pie of charts.
Exactly. This is the pumpkin pie. It's the gift that keeps on giving every week.
Gift that keeps on giving. Now the hammer, if I remember correctly, if we get a hot follow-up here, you were a buyer?
Yeah. Last Tech Talk, Hammer of Truth said it was a buy. Now it's starting to turn
like right here, right?
Yeah, that is correct. Right before we had the WASD report.
Okay. Got it.
Yep. And then we had that big uptick day during the day of the WASD, Friday?
Yep.
Yeah. And now, I mean, tell me if I'm wrong, this chart seems to be forming into a little bit of an M formation now that we've kind of topped out at about 690.
Not going to disagree with you. And look at today. Look at today's close. Right below the 200-day.
Yep.
So that is kind of like the first sign of a potential, things like rolling over.
Yep.
And to your point too, you have this nice M that's forming. So you could easily make the argument we can just go right back to 660 and you'd basically stay within this kind of like median range.
Right.
So what is the hammer telling you? Do you have the hammer out now? Where is it?
You know what? I don't know if the hammer's ready to come out quite on March corn. It looks like we're kind of rolling over, heading maybe a little bit lower. But I don't know. Some folks will argue, is it an M formation or are we turning this into an Elliott wave? Right? Are we going to have a little bit of a downturn and then have the fifth wave projected higher again?
Could be. I mean
where
do you have this starting? Right here?
I think I got mine starting at 640. No, I'm sorry, 650.
So right here.
Yep.
I guess the only argument I make against that is that if it is typically an Elliott wave formation, you don't retrace the first wave entirely.
It's a good point.
So I think, who knows, right?
Yeah.
But I think you're on to something here with a potential M. This 684, 685 number. Because look at the way this chart looked a couple of days ago.
Right.
Looked great and just clearly rejected it.
Yeah.
So closing below that 200-day, I'm on board with your theory, your original theory there about a trip back to 660.
Last leg of the M formation looks like it's definitely ramping itself up to give us a lower pricing action.
Okay, so the hammer was a buyer. Are you liquidating those longs?
I think at this point, what you just showed, closing below the 200 moving day average, I think if you were long into this market, this would be the point to liquidate and see if we can't get a drift lower to $6.50, $6.40, and then maybe layer back into the market, right?
Yeah. Well, I can't disagree with that. I agree. No, it seems like the pertinent thing to do.
Yeah.
You know, to your point, you got an M close below 200 day, and it would kind of stick within this consolidation pattern. So, all right, the hammer is officially liquidated. Their longs is out.
It's out.
Out. Where does the hammer rest, by the way? Like,
Well, the hammer usually rests next to me, but sometimes when I'm on the phone walking around, the hammer will travel, right? It's a traveling hammer.
It's a traveling hammer.
So
Is there like a pedestal or something like that? It's like floating within the pedestal. And like
I need to build one so I don't lose it anymore, honestly.
I mean, you really should. Do you sleep with the hammer? Do you have it like,
No, it usually stays right here in the office and kind of watches over everything, but we'll bring it out next Tech Talk for sure. Most definitely.
The people want to see the hammer. They don't want to look at me. They
Right.
want to see the hammer.
Exactly. They're here for the hammer, and that's what they're here for. We'll bring it out next Tech Talk for sure.
All right. You're out next week, though, right?
I'm out next week, so it'll be 2 weeks from now, and hopefully by that point, maybe we'll have Josh back on the show if he's done out west.
Well, like I said, my guess is he's on a ski lift right now. Just a theory. It's my working theory right now.
We'll get him back. We'll start this year out correctly.
We'll get him back.
Awesome. Well, until we get Josh back on the show, everybody, we are so glad that you tuned in to watch Andy and I talk about different charts. Thank you, Roger, for getting a hold of Andy, asking about a couple of them.
Thanks, Raj. Absolutely.
We love it. If you have not already, please subscribe to the YouTube channel. Give us a big thumbs up on there. Greatly appreciate that. Check out Andy and myself, all the other colleagues that we have YouTube channels going about. And until next time, have a great weekend. Have an even better week. And we'll see you in about 2 weeks.
See ya.